Hello and welcome. I'm Matthew from Rosie and Rosie, investment property specialists helping you invest in property with confidence. Today we're joined by Megh Castledine, mortgage broker with Mortgage Choice in Melbourne. Welcome Megh, and thanks for joining us.
Thank you for having me.
Megh, I know you love helping first home buyers, and today I wanted to chat to you about some of the jargon that many first home buyers may not be familiar with. I've selected a few terms that I find we often get asked to explain.
Sure.
Perhaps we'll start with those, and if you want to add any others that you think our audience should know about too, we'll cover those. How does that sound to you?
Sounds good.
All right. So number one is genuine savings. Do you want to elaborate on what genuine savings means from a lender's perspective?
Yes, certainly. So in most cases, the bank wants you to prove that you have 5% of your purchase price. And we say as genuine savings, that means that you've held it or accrued it in your account for at least 3 months.
Right.
So, for example, if it's the 5% is a certain amount, you wouldn't want to see that it's dipped below that amount, that you've used it or moved it into another account, for example. It can really depend. Genuine savings is to prove that you have propensity to repay the loan, that you can save. So even though you'll need those funds for your deposit, there is an instance where rental history can replace the savings criteria. So the bank can see that you can still save money because you paid rent, but you may have sourced that 5% from a windfall, from a gift, or otherwise.
Okay.
Yep.
So wherever that 5% or whatever that amount is, it needs to be in one account for a period of 3 months and not dropping below.
Generally speaking, yes.
Okay.
Yep. But as I mentioned, there are other things that can mitigate the need for genuine savings.
Yep.
Yep.
Sure. Okay, great. Number two, LVR or loan to value ratio.
Yes. So basically, the calculation is done so that we can see how much percentage of the property that you're borrowing when you include the costs. So it might be stamp duty and fees and lender's mortgage insurance that get capitalized or added to the loan. So the simple math on that is the loan amount inclusive of all the costs divided by the property value. It's quite a simple math, but it's often referred to, and the reason it's referred to is because it is in relation to your need to take out a lender's mortgage insurance policy, which I already know is your next question.
It is, yes.
So I'm just being a bit leading and segueing into that.
Yep.
So if a first home buyer, for example, needs to borrow more than 80% of the property value to cover the stamp duty and costs once their deposit's been taken into account, then they'll have to take out a lender's mortgage insurance, which is a policy that protects the bank. So the borrower takes out the policy, but it doesn't protect them, it protects the bank. And generally it is included in the loan amount, which means that you pay 30 years worth of interest, for example, if that's how long your loan lasts for. So it can be quite substantial. And I'm going to do another segue,
Sure.
just because I just feel like I'm on a roll.
Yeah.
So there are ways to mitigate having to take out an LMI, or lender's mortgage insurance policy. We briefly discussed in another video that there are some waivers and grants that are available. Feel free to get in touch if you want more information about that. Another way is for family to offer up a security guarantee, so that's generally equity in another home. Now, it's important to note that a broker will help establish if a parent or other immediate family member is a suitable guarantor, because that type of arrangement has to be put in place without putting that person at risk of losing their home, or there's a few things to make sure in that situation. And so we're usually happy to speak to the guarantor directly.
Yep. Okay, great. So we've gone LVR, LMI, guarantor. Offset account, that's one that I often get asked about. Can you tell us how you would describe an offset account to a
sure.
borrower?
Yeah, so the simplest way to explain it is it's your transactional account, so like your savings account where you can get your salary put into, and you can usually get a key card and use it at the shops. But any funds sitting in that account, so whether it be your salary or a nest egg or anything that you've got left after you've paid your deposit, that money is sitting in that account is used against the principal loan amount that they calculate the interest on every month. So the more money in that account, the less interest you pay on your loan. It does work in a similar way to redraw, but there are different stipulations. And again, it's a great conversation to have with the broker.
Sure, yeah. Quite a powerful product to have, the offset account. The other one that I get asked, and I'm sure you do get asked as well quite often, is comparison rate.
Yeah, sure.
What is the comparison rate? What does that mean?
Yeah, so essentially banks have to disclose a comparison rate, and it's just what's inclusive of the fees. So you can see the standard variable rate with a discount, but then you have to take into account, is there a package fee? What are the setup costs? And all that gets added and loaded to the interest rate, and then that's how we see what the true cost of a loan is, for example.
Yep.
So you'll always see that a fixed rate will have a higher comparison rate because it reverts to the standard variable rate in most cases once that fixed period is finished.
Yep.
Which is usually quite a bit higher.
Yep, excellent. Meg, do you have any other tips for first home buyers looking to get into the market and make the most of the various incentives on the table at the moment?
Yeah, certainly. So do your research. There's a lot of information on the Revenue SA website. There's also information on MyGov regarding the the Super Saver scheme. And again, speak to a professional to help you through the process and understanding about pre-approval and how that tool can help you when negotiating, and just understanding the process and how long it takes, and understanding your borrowing capacity as well as what deposits required. They're two different things, but they work hand in hand.
Yep, excellent, good advice. Thank you again today, Meg. I'm afraid that's all we've got time for, but before we let Meg go, can you tell us how people can follow or get in contact with you, Meg?
Yeah, certainly. So we're on Facebook at Mortgage Choice Malvern, or my number is 0433 103 316. Or you can catch me email meg.castledine@mortgagechoice.com.au.
Thank you again, Meg. We certainly look forward to having you back. And thank you for joining us too. We hope you found Meg's insights useful. And if you have any questions for Meg, she'll be only too happy to hear from you. Thank you for joining us too. If you have any questions for us, also please comment below or email hello@rosieandrosie.com.au. We'd love to hear from you too. It's been a pleasure having you with us again. It's time for us to go. Until next time, I'm Matthew from Rosie and Rosie, helping you invest in property with confidence.